Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centred around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast brought to you by Vanta. Vanta helps you save time, money, and build consumer trust, all by centralizing program requirements and evidence collections for frameworks like Dora. If you want to manage risk and improve security, then head over to vanta.com/fintechtimes to learn more. But anyway, guys, how are you doing this week? Back together again, ready to talk about fintech. Francis, how are you?
I'm doing very well. Well, say that. I'm a little bit under the weather, and I think that seems to be something going around right now because I'm hearing from a lot of people that they're ill as well. But no, the illness aside, I'm doing very well. It's been an exciting and busy week here. And yeah, looking forward to the conversation today. How about you?
I am doing very well, thanks for asking. And yes, there does seem to be quite a lot of illness going around. I think it's that sort of like spring change of weather maybe that's causing people to get a little bit ill. But anyway, Tom, how about you? How are you doing?
I'm doing well. I'm ducking and diving the illness at the moment. I'm not sure for how much longer because, as Francis said, everyone seems to be getting hit with something. But we've obviously got a lot of stuff going on at the moment. We've got Pay 360 next week, so we're doing a lot of preparations for that. So I think next week's going to be very busy, as this week was. So yeah, it's an exciting time. The fintech industry is very well underway and things are really kicking on and we've got a lot going on. So yeah, it's an exciting time at the moment.
Awesome. So, what are we going to talk about today? What articles have you guys brought to the table? Tom?
So one of the articles that caught my attention this week was about the Financial Conduct Authority reviewing whether the UK's £100 contactless limit should be removed or increased.
Great stuff. And Francis?
This week, my article is all about long payment checkouts and the willingness to abandon shopping carts across Europe.
Beautiful. And my article this week is from Fintech Australia, who is calling for government intervention into the fintech ecosystem. Let's get started. Tom, why don't you go first?
Absolutely. So, yeah, as I said, this article is all about the FCA basically reviewing whether the UK's contactless limit should be removed or increased. Because as we know, contactless payments are now the default for in-person transactions in the UK. In fact, around 85% of people use them at least once a month, according to UK Finance. While there are now 149 million contactless cards in circulation, covering 93% of debit cards and 94% of credit cards. And obviously at the same time, mobile wallets like Apple Pay and Google Pay have made it possible to pay without a PIN for even higher value transactions, which has raised questions about whether card limits on physical cards remain necessary. So, as part of this consultation, the FCA has outlined a few options that they could implement for cards. So, whether that's scrapping limits entirely, allowing payment providers to set their own thresholds based on fraud controls, or raising limits to better reflect inflation and spending habits. And obviously, the reason there's a limit in the first place is because of fraud. It's because, if someone was to gain access to a contactless card that isn't theirs, then they're at least limited to the max £100 purchases. And then there's always a risk that this type of fraud is going to become more attractive if limits are increased. So the reason I wanted to bring this story to the table is because I thought it is something that would impact significantly payments in the UK, which obviously impacts all of us. And I wanted to ask both of you whether you think raising these contactless limits for physical cards are a good idea, and which of the solutions do you like the most? Are you sort of in the camp of just get rid of these contact limits completely, or just raise them to say £200, or should it be something that consumers actually change themselves in their own banking apps? Or do you think they should stay the same because the trade-off with increased fraud isn't worth the risk at all? Polly, I'll come to you first. What's your take on this?
Yeah, thanks, Tom. I think, this is a really interesting kind of debate that I really like. And I really enjoyed reading through the article and kind of seeing all the different viewpoints and things. And I think contactless is one of those the contactless limit kind of conversation is one of those that's been going on for a long time. Obviously, it's, when they first changed the limit up to £100, that was all a big debate and kind of into the security and the safety of that. And now it's really interesting to see that same conversation happening again if we're thinking about removing the limit or increasing the limit, etc., etc. So I think it's really interesting that we're having these conversations. I think at the end of the day, it's a difficult one to balance. And I think, as with any payment, we're always balancing the idea of security versus, minimal friction, and having that, good experience for the customer. And so it is, I think, a tricky challenge to figure out where we can go from here in terms of the contactless limit. I will say there's been very few instances since the limit has been raised to £100 that I've felt that I needed it to be more. Like, very rarely do I apparently spend over £100, just in general everyday life. So I personally don't necessarily see too much of a desire to raise that contactless limit, but that's only my personal situation, obviously. I think it is an interesting one. And I think there are a lot of challenges here and a lot of challenges in place to kind of, I guess that just kind of go hand in hand with the payments industry, as I just said. But I think for me, I like the idea of having personalized limits, so that you can go in with your bank and your card provider and say, I would like to set my own limit at £100, £200, etc. I think that could be a really interesting way to get through it. I wonder if, again, they would do different limits for like a contactless card, like a physical card, or like contactless through Apple Pay or Google Pay. I wonder, again, would that be different? But yeah, I think it's interesting. I wonder how much fraud kind of comes into play when we think about contactless card limits. I think they're in consultation at the moment, looking into this. But yeah, but basically what I'm saying in a very roundabout way is that I don't know what the best solution to this is. I really like the idea of personalized card limits so that the consumer can really pick what's going to be best for them. However, I think I do understand that obviously that comes with kind of, I guess, associated risk or potential risk more than anything. So I think, yeah, I also be interested to know what the industry thinks in terms, like, beyond what we've got in the article. Like what do the industry thinks? What would be more useful for businesses and things like that? It's kind of a whole melting pot of tricky conversations. But isn't that what we kind of always do when it comes to finance and payments and things like that? It's always having those tricky debates to figure out what actually would be the best way, and kind of doing that as best they can. So yeah, it'll be interesting. I'll be looking out for the news story to say that we've abolished contactless limits or increased them or whatever, etc., etc.
No, absolutely. I think you've summed that up really nicely, and I think you're right when you say it is quite a divisive issue. It was last time they sort of increased the limit, and this time that they're talking about potentially getting rid of the limit completely or increasing it again. It's kind of having a similar reaction to it. As we've seen in the article, we've got some people saying, increasing it or getting rid of it completely is going to be fantastic for consumers. Just for flexibility reasons. It's then going to boost these companies that are able to accept higher payments. There's going to be less friction, so they're going to be profiting more because people are going to make larger purchases with their cards. And then you've got the other side where people are saying, actually, the amount of fraud or the level of attractiveness that this could be for fraudsters if these are implemented are going to be far worse than the benefits. Like you said, there are quite a lot of people that risky this actually wouldn't affect their day-to-day lives because they're not making regular transactions of over £100, and the few times that they are, they're happy to put their pin in and say, well, yeah, that, because they're only making one or maybe even less per month transactions of that amount. So yeah, I can see, and I'm kind of in the same camp. I'm not one way or the other. I can see that they probably should increase them slightly, just given inflation, how much prices have increased over the last few years. I guess if you go and do your weekly shop, it could easily be well over £100 now. So I think it's a difficult one, and I can see them increasing it, but getting rid of it completely, I'm not too sure. I feel like that could be a bigger sort of fraud issue than they want to implement. But Francis, what do you think? Are you in one camp or the other?
Probably, to be honest. I think I'm definitely on the side of, removing it is not the play. In short, I see the value of removing the contactless limit because, as the article says, it would potentially raise sales for merchants and potentially make it easier for customers to make transactions, as you said, especially like doing your weekly shop. It's so easy to spend over £100 these days that in that regard, I guess it does make sense. And perhaps it's just sort of my own naivety and due to being around the people that I surround myself with. But very, very few people don't have a digital wallet now, be it Apple Pay, Google Pay, whatever it might be. And these digital wallets, they don't have a limit. You can spend however much on them. And that's because there is a form of security there, isn't there? You know, you've got your biometrics, your Face ID, your fingerprint ID, whatever it is. And that sort of stops the potential of, if you lose your phone normally your phone, that somebody who picks it up can't just say, right, I'm going to start spending now, because they're just not going to be able to access it. If you lose your card, however, all they need to do is tap on a POS system, or, do that if we're talking about contactless, and they're able to spend straight away. And I suppose the friction that you get when using a digital wallet, you know, there is those few seconds of authentication that need to take place. And so it's not necessarily as seamless as just touching a card. And it's like you guys say, it's very easy sort of just to forget your PIN and then rely on the contactless. But overall, I'm not convinced that scrapping the limit is a good idea. And I think there would be a huge, huge rise in fraud. And in turn, this would cause a lot more stress on banks than I think they probably are preparing for. And in turn, merchants are people sort of making these claims against them, saying, you know, I didn't spend this money here, and so on and so forth. I think, as Polly sort of mentioned, the idea of a personalized limit, I think that would be quite good, because I think at that point people can say, like, I understand the risks of expanding the limit. And then I think there's an argument to be made of, well, if you understand the risks, then, you know, you understand, not necessarily forfeit a fraud claim, but perhaps, I don't know, it's a really tricky one, which is why I'm not the one working in these fraud departments at banks. But yeah, I think it would need some sort of way to sort of say, like, take responsibility of, in the same way that on a crypto platform it says be prepared to lose money. If you wanted to expand your limit above £100, it'd say, like, well, be prepared, like, this will make it very easy for fraudsters to access your funds should they get a hold of your card. But yeah, in short, I think getting rid of the limit just isn't the right move.
Yeah, I completely see where you're coming from, and I like the point you made about, you know, the fact that there's a reason why there isn't a limit on these digital wallets, and that's through those biometric checks that you have to go through every single purchase. And I feel like obviously that isn't possible with a physical card. But what we have seen, I guess, being implemented a lot is the sort of the ability to go on the app and just press one button to freeze your card. So I guess if you lose them, you've always got that option, presuming you have your smartphone on you have access to your banking app. That's one way that you can try and keep it secure. I think, you know, you even see adverts about these banks, you know, highlighting, oh, we've got these new sort of ways that you can freeze your bank cards. I think it's Lloyd's Bank, where in the advert the dad freezes his card so his payment won't go through, so he doesn't have to buy his daughter a toy, which I think at the time was quite an amusing advert the first time I saw that. But you know, it just goes to show that most banks now have implemented that technology, and that's one way that I guess consumers can keep themselves safe if they continue to use contactless cards. But like you said, I think it's just such a huge fraud issue that it's going to be really difficult to see them completely scrapping a limit, because that could just open the door to so many issues, and just be really complicated for the whole industry. So yeah, it'll be interesting to see where they go, and I'm sure we'll be catching up once they release an update about that. But with that, Francis, I think your article, as you said, has something to do with checkouts and payments. So why don't we go to you next?
Yeah, as you were sort of discussing your article, then it did make me think that there are a lot of sort of relevant points on the topic of fraud. And that's because, according to the research that was found in my article today from Payable, it said that Brits are the least forgiving when it comes to long checkout processes, with many claiming they would rather remove fraud prevention checks altogether to complete a transaction faster. So the research examined Germany and the Netherlands as well, and found that 29% of German shoppers, 36% of Dutch shoppers, and 44% of UK shoppers agreed they did not have the patience for a cumbersome checkout process, with respondents admitting to abandoning their online shopping baskets. The report looked at what could be done and found two recurring themes: speed and protection. So Germany and the Netherlands were the respondents seem to be more in favour of a secure checkout, while many UK respondents indicated that they would rather have a quicker checkout process. 25% of UK shoppers stated they are happy to let any online retailer store their payment details if it in turn makes the checkout process easier for the next time they want to shop there. Meanwhile, only 15% of Germans and 16% of the Dutch respondents said the same. Additionally, Payable found that a third of UK shoppers are prepared to have some online fraud protections removed in order to get a faster checkout process, while a quarter said they would be happy to remove fraud protection checks entirely to get the fastest checkout experience possible. This was not really shared at all by the German and Dutch respondents, as those in Germany only 12% agreed and those in the Netherlands only 17% agreed that they'd be prepared to compromise on security for speed. So the results underline the importance for UK shoppers of speed and convenience when shopping online, while also providing insights into areas which consumers are prepared to change their behavior or compromise on in order to get the experience they desire. So the reason I found this interesting is this whole idea of if we say that we want to abandon sort of fraud checks and then we fall for fraud, to a fraudster, a fraud attack, or lose money because of fraud in one way or the other, the instant response is to go to your bank to try and get that money back. But if you're saying I don't want these fraud checks in place, then surely that means that the shopper is more to blame for having that initial attitude of, I'm very blasé about my finances, I don't care if they need to be checked or not, I just want the quickest experience. Is it a blaming the victim type of mentality, or is it the attitude of, no, you made this bed, so now sort of rest in it type of thing? So I wanted to get your guys' thoughts on speed versus protection, and sort of see, well, firstly, do you side with the nation's sort of speed extremists? Again, that sounds bad, but it's not necessarily a bad point of view. Or do you value protection more? And then secondly, are there any points from the article, for example, that really stood out to you? Polly, I'll go to you first.
Yeah, I think this, again, another really interesting one. And I really want to kind of pick up on kind of what you were just saying about this whole victim blaming idea, because I find that absolutely fascinating as a concept. And I think there comes a point, right, where, people who know better need to kind of make the decisions. That's probably a really bad way of phrasing it. But obviously, we all know, we've talked time and time again about how much, the consumers want the fast payments. They want to have those really quick checkout experiences. And obviously, the data in this survey is kind of, showing the demand for the frictionless checkout. However, I think surely there has to come a time where the people in charge, the payments industry, regulators, the government, whoever you want to kind of give that title to, has to go, no, like there's a level, right? There's a line, and you can only go so far. Like a really stupid analogy that I can think of is that every time I eat chocolate, my dog cries at me because he wants the chocolate, but I can't give it to him because it will kill him. And obviously, really dumb analogy, completely different situation, but that's kind of the point. Just because people ask for no fraud protections, frictionless payment experiences, doesn't mean that you necessarily should give them to them. As the payments companies, as fintech companies, as regulators, as finance bodies, or whatever, surely there is kind of like a duty of care here to go, we acknowledge what you're trying to say, we acknowledge what you want, but that's not going to fly, and it would be our fault if something happened. Because I think there is an element of our fault. I don't think you can blame the consumer mostly. I don't know if you guys would agree with me, but I don't really think you can victim blame in this scenario. Like, realistically, we're kind of trusting banks and fintechs and financial institutions to keep us safe on that regard, and kind of obviously, we as consumers need to do our best to keep us safe as well. Like, we can't just be out there willy-nilly throwing out our card details and wondering why we're getting our money stolen. But at the end of the day, I think there is a duty of care from the people, I say people, but from like the organizations that provide these services to us. And so I think there needs to be a point where it goes, we've made the checkout as frictionless as we possibly can without compromising your safety. And not to say that can't change, that can't evolve, as new technology comes and new things change and, people kind of discover new ways of doing things, that's fine. But I think there has to be that line of going, this is what you're getting, this is the best we can do, this is the best of both worlds. We cannot forego security checks, and we cannot, make this any less frictionless without, being able to keep you safe. And I think that's really important. And I think, there is an element surely of people wanting that security and wanting that safety. I know, there's a willingness to be able to reduce it and save time and effort, but I think, there's still an element of people being afraid of fraud, or at least there should be if there isn't, because, I think did the article say it was 1.17 billion of fraud losses in 2023 in the UK alone, which, that's a very big amount of money. So yeah, it's a challenge, and I think merchants and payment companies and all the rest of those people that I've just said have that challenge on them to balance speed and convenience with the security. But I think it's really important that they do that, and I think it's really important that at some point, it kind of goes, this is what's going to happen. We're taking your ideas on board. With our knowledge and expertise, this is what we've come up with that balances the both of them. Because I don't know anything about facilitating payments. I don't know anything about making sure fraud doesn't happen as a consumer. So I'm going to let the people that do know do their thing, and I'm going to do my thing, and then we'll come together and it'll all be wonderful, happy sunshine and rainbows in an ideal world, obviously. But yeah, no, I think, I don't know, maybe I'm rambling a little bit, but I'd love to know what you guys think on that. But that's kind of where I sit. I think at the end of the day, you've got to take the chocolate away from the dog.
That is a brilliant analogy. It really, and I think I know you said it's got nothing to do with anything, but I think it's right. It's a thing of consumers don't necessarily know what's bad for them, and if they do, I think they've got this idea, like I sort of mentioned before, that if they do suffer fraud, then it's not a big deal because the banks will reimburse them. But I don't think that's the right attitude to have, and it's definitely not the right attitude to have from a bank's point of view. So they should be doing more to say, like, we hear you and we're going to try and work on that, but ultimately we simply can't put ourselves or make ourselves responsible for your losses due to our sort of negligent process, I suppose, and sort of having this idea of, we know it's bad, but we're going to do it anyway. And I think this really sort of works with Tom's article as well, because and the idea of contactless, because if you know that having a contactless limit removed and having sort of an unlimited spending amount is bad, then why are you doing it? It's really, I know that the consumer demand is there, so that's why you're doing it. The consumer demand is there, but it seems irresponsible almost. And yeah, I think your point is really valid and a good one, which is the industry expert should sort of say, like, we hear what you want, but we know for your sake that the trouble and the process of having to make a fraud claim, because I mean, you can make one fraud claim perhaps, and then, you'll get that money back. But if you then have to make a second or a third one, banks are just going to think that, one, you're not trying to protect yourself, and then you're not going to be eligible for it. So, or for eligible for the money back. But yeah, Tom, what do you think? Do you agree with Polly and myself, or do you have a different view?
No, I completely agree. And I think the only thing that I really want to add about that is the stat that, a quarter of UK shoppers will happily remove fraud protections completely to get the fastest possible checkout is really surprising. And that you see that sort of stark contrast with where was it? I think Germany and the Netherlands, where shoppers were far less likely to compromise on the security of their payments. And I think that's perhaps points to a sort of culture difference, and maybe potentially a fact that people are quite happy to say, actually, you know what? If I do fall victim to fraud, I can claim that money back from banks, and maybe an over-reliance of that sort of safety blanket there to say, oh, I don't need to be safe because my bank is just going to give me the money back if a fraudster, takes advantage of this. And I think perhaps there needs to be an element of more education in this respect, and say, if people were aware of just how much fraud does take place to, on an everyday basis in the UK, and realize that if anything, the fraud protections that we have already perhaps aren't doing enough, and there needs to be a sort of level beyond that. And obviously, we've spoken a lot about balancing that and friction before. But yeah, I think there just needs to be a lot more awareness around this sort of the real impact of fraud, and maybe people need to realize that they can't just rely on their banks for refunds after being hit by fraud, because that's just not a way to sort of operate. But yeah, to your both of your points about letting the regulators set the limits, letting the regulators put the protections in, and letting the banks make sure they're protecting their consumers is the number one priority. And yeah, I completely agree with that.
I think you said what I was trying to say, but just in a much better way, in a much clearer way. But yeah, no, I definitely think that it's going to be as per usual, it's going to be an interesting one to see what happens next, and see how the UK sort of attitude to fraud evolves over time, and see if that education that you mentioned does come into play or not. But yeah, it's only going to be a time will tell situation. But with that, why don't we go to your article, Polly?
Absolutely. So a little bit of a genre shift from the payments we were just talking about. But essentially, Fintech Australia, the industry advocacy body, is calling for the Australian government to intervene after finding that many smaller fintech firms are struggling to get off the ground. And I just thought this was a really interesting thing to talk about today, because we've kind of been talking a lot about funding and startups and the challenge that it can be to make your own fintech company. So basically, a KPMG report detailed a 14% decline in the number of deals in the second half of 2024. So Fintech Australia is really urging the government to recalibrate on its research and development tax incentives and the early stage ventures capital limited partnership program in order to help buffer fickle investment trends for newer fintechs in Australia's ecosystem, because smaller fintechs are increasingly struggling to be able to secure that investment to get off the ground. Whereas, obviously the larger firms are still able to do so. And they kind of talk a lot about this two-speed fintech ecosystem. And this was really kind of the phrase that jumped out of me and made me want to speak about it today with you guys. So they're worried, essentially, that Australia is at risk of creating this two-speed fintech ecosystem, one where larger players continue to grow, but smaller, newer companies that could become the next larger players are really struggling to get off the ground. So you see this kind of play out across, the available funding data, where it's taking more time, but the more established fintechs are still securing that funding, whereas early stage fintechs, many of whom are still flying under the radar, still really struggling to get off the ground, are really struggling to find the investment. And so this is what they're calling for the government to really get involved with and have an intervention on, in order to have, a really great impact. As obviously the only way for an industry to grow is to really nurture the startups and really nurture the newcomers into the industry. Otherwise, it's going to move forward and nothing's really going to develop, because you're stuck with the same, fintech companies doing the same thing as they always do, which isn't a problem, but it kind of is when you want to have, a nice, competitive, lovely, big, full industry full of lots of different players doing lots of different things. So Fintech Australia is calling for a number of key initiatives, which is hoping to boost the growth of the fintech industry and kind of really boost the growth of its startups. Some of its recommendations include funding support, as well as, suggesting the government put an allocation of funding towards supporting green fintech initiatives, aimed at supporting corporate Australia, etc. And just generally basically it kind of boils down to funding. Like they really think funding should be easier to get to, and also they're recommending that there's a refocus on fintech as a key international export as well. So I really want to get your guys' thoughts on this. I know it's kind of a bit of a dramatic shift as to what we were just talking about with payments, but again, this kind of idea of a two-speed fintech ecosystem is something that's I'm just really drawn to as a concept. And I think it's really interesting to see what these guys in Fintech Australia are doing, and whether it's something that we really need to think about across the globe as well. But I mean, Tom, what do you think about the whole thing?
Yeah, I think this is a really interesting story, and the sort of idea of a two-speed fintech ecosystem really stood out to me as well. And I think it's really interesting, the fact that people are basically saying that these sort of tax incentives in Australia do exist. They have these initiatives where you can get tax offsets that are designed to encourage companies to engage in research and development and innovation in Australia. And basically it's the whole idea of that is to enhance business cash flow and provide funding to support product development and growth. And yet it's basically the system that exists is just far too complex. And for the smaller companies, which have a lot less resources and staff to fill out these forms to actually ensure that they're complying with the requirements, are really struggling to do so. And it means that the only people that really benefit from it are these larger firms, as you were saying. And that's, making it really difficult for the small players to get off the ground, because even though these sort of initiatives exist to support them, they're actually the ones that are least able to access them, because they just don't have the time and resources to get them. So I think that's what really stood out to me, and it just goes to show that there does need to be perhaps more support, whether it's not just direct funding, but some way that the government can support, especially the small firms, which, as you said, could end up becoming, if given the right support, one of these big companies, and could really explode and flourish and become, a unicorn in some cases, or just be a really solid company in Australia. I think, it just goes to show that more support is needed. And obviously, a lot of the recommendations are to do with, we need more funding in this, we need more funding in that. But I think perhaps just investment in giving companies support, giving people that they can just talk to and get advice from, is just as valuable in some cases. So yeah, I thought it was a really interesting story, and I think it's definitely one where obviously funding would be great, but also something that could be equally valuable is definitely advice, and just support in general.
Yeah, I think you're absolutely right in speaking of the support and other things needed to really foster the next generation, I guess, of fintech players. And it is difficult to start a fintech company and being a startup. I mean, I guess it's difficult to be a startup in any industry, never mind fintech, but having, the right support in place that is, accompanied by easier access to funding, I think is absolutely going to be key. So you've really hit the nail on the head there. But Francis, what do you think about all this? Where do you lie?
I mean, I think you guys have pretty much said everything already. I don't think, there's not much else to it really. It's just that there is this idea that in an ecosystem where the strong keep getting stronger and the small players just don't even have a shot at investment, I think that's when the government needs to realize something here isn't right, and the only way that we can or the only way that this will change, I should say, is if there is some sort of intervention. And I mean, we've seen a lot of big names sort of come out of Australia, like Afterpay, Airwallex, CoinJar. Like, these are big fintechs that we sort of know globally now, and it's like Rehan Almeida says, and like they say that big organizations can be made if they have the right support around them. So it is really, like you've both already said, it is all about having that support available to ensure that there can be a long and prosperous sort of ecosystem that isn't just made up of big players, that's constantly sort of welcoming new ideas to be created in the region. Otherwise, startups might look to go elsewhere, and I don't think any fintech ecosystem wants to drive away potential innovative startups.
Yeah, 100%. I think, I completely agree with what you've said. And it's one of those things, I think, that we kind of keep coming up, right? We keep talking about the funding problem. I remember, 5 years ago when I first started in the Fintech Times, we were kind of still having that conversation then about how we can best support startups. And so, 5 years later, yes, we're still having these conversations now. But I think you're right. Fintech in Australia is, some of the big players in the ecosystem. So I think it makes sense to be really nurturing everything. And I think it makes sense on a lot of other points as well, to be able to just nurture the up and comers and make the fintech industry grow. And, the only way to do that is, by funding and support. So, but yeah, anyway, thank you guys so much for that. And thank you for bringing your articles for discussion. If you want to hear any more about anything we've talked about today, head on over to fintechtimes.com, where there are plenty more news and insights over there. But very quickly, we will go on to what I learned this week. So each week, being on the Fintech Times editorial team, we are learning so much new stuff about the fintech world that we thought it'd be fun to share that with our listeners. So, Tom, what have you learned this week?
So this week, one of the things that caught my eye was new research from media agency which basically found that 62% of young adults think financial and retail brands don't do enough to help them understand the risks around credit, and 56% believe financial brands tend to encourage young people to take on loans or credit without helping them understand this risk.
Awesome. And Francis, what have you learned this week?
So this week I learned about a new sort of scholarship program that was launched by the crypto exchange Bybit to give access to technology like blockchain to students across Africa with a new partnership with Alt School Africa. And yeah, the Bybit Academy will be launched alongside a $100,000 scholarship fund to grant 1,000 students access to technology-focused education that equips them with the skills needed to thrive in a digital economy. And I thought that was just a really cool partnership announcement.
Awesome, thank you, Francis. And what I learned this week is that Tink has celebrated a 10,000 merchant and €10 million daily peak milestone as their pay by bank adoption grows. But anyway, guys, thank you so much for joining me once again this week. It has been great to talk about fintech with you. And I will catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.